We weren't expecting much from the Fed this week, and thankfully it delivered. As anticipated, the Fed held rates steady at its first FOMC meeting of the year. For context, the Fed meets about every 6 weeks to set the direction of monetary policy. But here's the key takeaway. The decision was not unanimous. Two Fed governors, Christopher Waller and Adriana Kugler, dissented, saying they favored a 25 basis point rate cut instead. The Fed remains laser focused on inflation being stuck above its 2% target. However, outgoing Fed Chair Jerome Powell acknowledged something important. He expects inflation to continue moving lower due to a softening housing market and goods inflation that was driven by temporary tariff impacts. Strip those temporary factors out and inflation is effectively at the Fed's target already. Even more telling, a majority of Fed governors now believe the federal funds rate is above neutral. Translation, rates are restrictive and cuts are coming. The only question is timing. So the bottom line, we should see more Fed rate cuts this year, but patience may be required before they arrive. And this is exactly how rate cut cycles begin, quietly, with dissents and subtle language shifts before the headlines catch up. Be sure to subscribe so you can keep track of what rates are doing and why. I'll talk to you soon.